Hello everybody, welcome back to my channel. This is my 3-week update through April 24th of where I'm currently sitting in my car hacking fund. I'll be going to a video of actually what I have in my stocks, what I have going forward. This is an in-depth view of the stocks I'm currently purchasing in and my plan going forward and why I'm buying into them. So looking at my broad portfolio, you'll see I have 5 ETFs I'm currently invested in: DIV, PEY, NOBL, SCHD, and BNDW. So this is my last video, which was the only one I first invested. So this is because this is my 3-week update. I recently bought about 200 shares of PEY and 200 shares of NOBL. You can see the market value there and my cost basis of where I actually bought them from. And my original investment was 16 shares of DIV, 7 shares of SCHD, and then the 1 share of BNDW. So since my investment is roughly about $1,000, I'm up $82. So my first 3 weeks I'm up. I'm pretty happy about that. I really can't complain of being up with the market the way it's going and where it's been. You can kind of see my asset allocation. It's down at 72% because I also transferred in $400. So that's where it's seeing that is not counting that money because that's $400 in cash. So that makes up the remaining roughly 27%. But if you go into when I bought, you can see on the first, I bought originally the first roughly $600. I was surprisingly received my first dividend payment from DIV on April 14th, and that was then reinvested because I have all these stocks, ETFs, on a DRIP, which is dividend reinvestment plan. So any dividends will be reinvested into that set account. And then you can see about PEY on the 16th, NOBL on the 16th, and then I went and bought another share of SCHD to get me up to 8 on the 24th. And then you can see at the very top, I just crossed out where I transferred money over because I don't think that's pertinent. Now, if you look at each individual stock, first starting with SCHD, it is a fairly low cost, been doing pretty well for the first month because it did buy on the first, it did go down, but it then has jumped up. If you look at the bottom right hand corner, you see the dividend yield, which is pretty high at about 14%, but that's based off current pricing. Before the market dropped, in early February, mid-February, March for sure, this stock was trading at about, I think, 25, $30. So it definitely came down a while. You can see the expense ratio is quite high. This, when I was originally researching this had a 9% yield at a 4.5% expense ratio. So take off a 0.5% from the yield. That's what I'm going to be receiving every month because the stock does pay monthly. Some people say the 0.46 is high. I look at anything underneath a 0.5%, especially with this kind of return, is worth the risk. I'm willing to pay that a little bit to get that additional. I recently switched to PEY, and if you look at this chart, you'll see this has a more typical 5.8% yield or return. The stock has also gone up. It's been a little more flat. And then you look at the expense ratio at the bottom is 0.53. So after talking to a coworker who's been investing for quite a long time, he actually switched out of DIV and put his shares into PEY. His reasoning for that is DIV will give you pretty high dividends month over month, and both of these are monthly paying dividends. But DIV will eventually lose its value over time. It will not grow with inflation, so you're technically kind of losing your money, you're losing your asset year over year, but you are getting the dividend payment, which is quite high. I don't foresee myself pulling out of DIV, but all my future payments in for mid-cap will be going into PEY, which is still a pretty good yield. Based on looking up the ex-dividend date, I am expecting about 6 cents per share with 14 shares, which is about 90 cents. I think it's like 86 to be exact. So I'll be kind of sitting around there from PEY. Then the next, if you look at NOBL or Noble, this is a Dividend Aristocrat ETF. So this holds every Dividend Aristocrat company out there. A Dividend Aristocrat is someone who's been increasing their dividend payment year over year for, I think, at least 25 years. It has a smaller payout of 2.6 on the bottom right if you look at the dividend yield, but the expense ratio 0.35, I'm okay with that. This one will grow a little bit more from what I foresee when it comes to the actual stock increasing. When you say someone like Coca-Cola or Pepsi stock goes up, this will also go up. So this is more of a value slash growth is how I look at it. I can be totally wrong depending upon how it's structured. But it's, I bought a couple of shares. I don't know if this will be my primary, but I want to diversify a little bit because this is more of the consumer good basis of Pepsi, Coke, Procter and Gamble, 3M, P&G. Basically, companies are doing really good right now with this whole global pandemic. Then, if you go back to my tried and trusted SCHD, I personally really love this stock. I am investing in Schwab, so they have a very low cost, high yielding dividend ETF, which I really like. If you look at the bottom right, it's about 4%. If you look at the very bottom, you see that the growth expense is 0.06. So I'm gaining roughly 4% for this. If you look at this, because this one does pay quarterly, and so does NOBL, I will be receiving about 44 cents. That was the previous one. It can go up, it can go down. But I'll be receiving about 44 cents per share. I won't be receiving that dividend probably till end of June, early July. But it's something that's happening. It's going to be a good value coming in every quarter to see that about 44 cents, 45 cents coming in. I currently have 8 shares, and I will be investing more money into this. And I probably won't be investing as much money into NOBL. And then finally, I have my one bond fund, which is a Vanguard ETF. Again, this is very safe, consistent money with a government bond. It has 3% return on the yield, very low expense at 0.06. So this is about a 3% return. It is a total world bond market, so it has a very good diversity classes. I don't know if I want to extend to other bond funds, say do like a short term 1 to 3 year, do like a mid term 5 to 7, or just stick with this. This one also pays out monthly, and the previous yield was about 12 cents per share. I only have the one share. So with this and PEY, which I should receive in a payment here this week, the week of the 26th through May 1st, I will receive about another dollar. So that means in the first month of investing of about $1,000, I'm like $2 short. I will have returned roughly $3. So first month, $3. I'm excited to see it. I'm excited to go forward. I just need to change my mindset around trying to time the market. Right now, I'm afraid to put money in. Like, it's like, oh, I want the market to go down so I can buy in as it goes down. If it goes up like 2%, I don't want to buy. I just need to get that out of my head. This is for the long term. This is something for future growth. So going 1 or 2% now is not going to hurt anything. I need to be in the market. I need to receive those dividends. That is how I'm going to make my money. That's how this is going to grow. And as of right now, I plan on staying into this Vanguard ETF, SCHD, and PEY as my main three ETFs that I'm going to be purchasing into until I get about 2,500. I believe that's what I said in my first video, is that I want to kind of stick with a couple of funds that are ETFs, get that broad market diversification before I start picking and choosing individual stocks. So that was my roundup of my stocks, where I'm sitting at, and my positions. I hope you guys kind of learned something, learned from my little mistake of going into div a little too soon and trying to chase that yield. I am not a financial advisor. I have an engineering degree. So this is more so of something for you guys to watch, for you to learn, and to go forward, and hopefully to encourage you to invest this on your own and to go and gain something when it comes to building to your own financial future. Thank you for watching.